Good evening and welcome everybody. This is the Thursday evening Viper Trading webinar. If you're here to learn about trading futures markets using the Viper tools, you are absolutely in the correct place. Tonight's topic was going to be trading ranges. However, today was a pretty trending day, and we had some very good correlations between the movement on the equity markets as well as correlations to the movement on gold. So instead, we shifted the title to Follow the Leader. And what we're going to do is we're going to show how to find out which market is leading the other markets and then how to trade around it. So it should be really good. See if you can stick around for the whole thing. Should be about an hour, so let's get going. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or the webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody does know that you do trade at your own sole discretion. All right, so without further ado, let's get over to screen one, which looks like this. I see we got quite a few new faces in here, and we got some folks that have just joined the Viper team. Welcome to all of you. Some of you may be familiar with what you're looking at. Others of you may not. We trade futures markets intraday here at Viper. We don't hold long-term overnight positions. We're in and out of the market, usually within the first hour or two of the market open. I'm here in California, so the times you see on this chart are all Pacific time. The equity market's open trading here in the U.S. at 6:30 Pacific. So I have a line on each of these three charts showing 6:30 on these markets. Now, if you know, if you've been in our live room, you know that we showed 4 charts in there. You're actually physically logged into Gary's computer, my business partner in Oklahoma, when you dial in through the GoToWebinar interface. Right now, you're on my computer here in California, and I'm showing you the NASDAQ. So we have several types of futures instruments that we trade. Mainly, we focus a lot on the equity markets. So we have the E-mini S&P futures. We're on all those are, of course, are on the March contract. We'll roll those in March. Mini NASDAQ NQ, which we'll talk a little bit about here. The Russell, RTY, we used to have that in the live room, if you remember, and it was recently replaced a couple of 6 months ago with YM, which is the E-mini Dow futures. The other two you see in the room that we trade quite actively is our resident expert on crude oil trading, which is Gary. And of course, he's also pretty heavily into gold, and I trade gold as well. That's on the February contract for now. So what you're looking at here is we've got a data feed coming in from our broker at NinjaTrader. You may have an account at OneUp Trader or Top Step Trader or perhaps another broker like AMP or something. And so you get connected to your data feed, and we trade primarily 4 range bars. So each bar is 4 ticks. Now, if we didn't have any Viper indicators on here, you would just see 4 range bars just kind of going up and down and up and down and all around. It'd be hard to see trades. So what we did is we created our indicators that sort of run algos, if you will, against the data feed coming in. So namely, those are background colors, red, intermediate, and green. Bar colors, blue, yellow, and red. We have the power meters, which are the short-term trend on the chart for of those. We have the alerts. When the trend is up, we turn on the long alerts. When the trend is down, we turn on the short alerts. And then, of course, we have the, where is that guy? Predictors. You see those in the room, real-time swings. For the purpose of this webinar, I'm just going to go ahead and leave them off. And then, of course, the most predominant thing on here is obviously going to be the bands. So the thick line in the middle, most of you know, of course, is the mid-band. And we have 1, 2, 3, 4 below it, 1, 2, 3, 4 above it for a total of 8 bands. By the way, if you're completely new and you're looking at all this for the first time, don't feel like you have to absorb all this in the next hour. We have tons of recording webinars recorded on the website that you can go see for free. Of course, if you're a member, you get to log into the member site, and there's several hundred hours of recorded material in there where we show you all the terminology and how to trade the system. So I'm not going to, due to the constraints of time, I won't be getting into a lot of detail on that, although I will show trade entries to you. But tonight what I want to focus on is the correlations in the market. Now let me explain how I use these, and you can do it however you want. And I'd like to do it like this. Let me get a big open space of NASDAQ chart where I can show this, to explain all this to you. Okay, let's go with this. All right, so I'm sitting at my desk, and I have what are called these two things called pole stanchions, which is basically a fancy word for a stand, a big metal stand, and a big pole that comes out of it like this. Okay, and I'm just gonna explain this. Most of you already know this, but I'll just explain it real quick. So we have a pole that comes up here like this, and to the right of it, I have another pole set up that looks almost identical to it, but it sits over here to the right, like such. So this is actually, the right one is sitting on my desk, and the left one is sitting on a big table I have just directly adjacent to my computer. Now I'm going to explain to you why I'm showing you this in 1 second, okay? All right, so there's the poles. And then I have large flat screens that I use to look at the market. So I have two graphics cards in my computer, and coming out the back are HDMI feeds, and the HDMI feeds go into these screens that look like this. So there's one over here on the bottom. There's one over here on the top that looks like this. They're all like on top of each other, attached physically in the back to each of the poles. So then I have another one over here that looks like this. I was going to toggle between the screens tonight to show you how it actually looks if you were sitting here right next to me to trade it, but I thought it'd be easier to do a little consolidation, and so what I've done is I put a lot of things right on the home screen, just on one. I think it's going to be, instead of jumping between all these screens, it's going to be a lot easier to just show you like on one screen how all this works. So on the bottom, this is a great setup. If you've heard me say this before in the live room, I've said it in other webinars. If you can afford to get yourself a couple of good graphics cards, they're really inexpensive now. They've really come down in price. You don't have to use these pole stanchions. There's other ways to do this. They're not very expensive. Sometimes you can get them on sale. Go get yourself some big screens. If you can get 24, 27, or 32-inch screens, it really helps to have that big market picture in front of you, because when I explain to you how I do this, it's going to make a lot of sense. So the primary screen that I trade on is this screen right here directly in front of me, and that's the one you're logged into right now. So the way it looks if you were sitting here looking at it is the ES chart would be right here on the right, taking up approximately half of the screen. So on the same screen directly adjacent to it, I have the YM chart right here, like this. So that's screen one, directly in front of me, and these are a couple of the main instruments that I trade very heavily in the morning, okay? Now over here to the left, on screen two, my setup looks like this. Right here to the right on that screen, I have an NQ chart right here with all our indicators on it, just like you see here, just like you see right here. On the same screen as NQ directly to the left is the RTY chart, which is the mini Russell futures, like that. On top of the left-hand screen, the upper third screen is dedicated to crude oil. So CL fills this screen right here with the 4 range bars and the Viper indicators up here. So here's crude, and it takes up the whole screen, just dedicated to crude. And then on this screen here, I have gold. taking up the entire screen by itself. So let me explain how I make use of this configuration every morning. And if you can get a configuration like this, or even if you got 2 and didn't have 4 or 2 or 3, 2 is, I would say, a minimum. You can get a graphics card that has 2 outputs, AVI and HDMI, and you can pick the 1 or 2 or 3 instruments you like. And maybe you don't have these top 2. Maybe you just have this one on a stand, and you have this one on a stand, whether it's on your desk or however you want to do it. And then you can have four charts that look like this. So now, how do I use this? Let me explain. You see this guy NASDAQ, and I'm going to show you in a minute how this works. Okay, this guy is normally the leader. So I'm going to put that right on here. Now, what do I mean by that? What do I mean by leader? Well, you're going to see in a minute what the leader does is the leader normally makes the first move in a trend direction, whether that be up or down. So I'm constantly scanning like this. I'm looking at my ES chart because this is what I mainly trade. This is where I make most of my money in the morning, is on ES. Next would be YM and gold trades. Occasionally I'll take a crude. If there's a good trend like today, there's some great short setups in the morning, so I'll occasionally take a crude. I only put 1 or 2 or 3 contracts on here. I normally don't load the boat on crude. So my eyes are constantly doing this. They're starting here, and they're glancing to the left, and they're glancing to the right. They're glancing to the left, glancing to the right, especially at the open or potential trend changes. What I'm looking for is, I don't rarely take a trade on NASDAQ, so I need to be clear about how I'm using this configuration. I'm not using NASDAQ necessarily most times to take trades. I am simply observing what it's doing, because normally it will lead other markets by as much as 30 seconds to 2 minutes. So when I see a break up or down on this, I quickly turn to the right and start to decide what I'm going to do with these two, whether I'm going to short them or go long. Now, another thing I do when I'm scanning this, so my eyes are kind of going back and forth, and then I'll glance up here at gold. Now, I'm going to go ahead and explain the relationship. Most of you know this, but some of you might not. How the correlation between gold and equities is an inverse relationship. Most of you know it's a mirror image, right? Inverse relationship. Here, let's call it correlation, because that's what it is. It's an inverse correlation. Now, this doesn't work 110% of the time, but it works most mornings, most days. I'm going to show you many, many times today where the correlations between each of the equities in relationship to each other, and then the inverse relationship with gold was intact. It's amazing to watch. If you can ever get a setup anything close to this, you will have a leg up on the markets. A lot of people say that trading is like gambling, and I'm here to tell you it's not. I said this in the live room this morning. Some of you might have heard it. It's not gambling. It's calculated risk. We only take trades that have a high probability of success. Now, you contrast that with going into a casino. What are your odds of winning in a casino? Who has the edge in a casino? Who has the edge in a casino? Anybody? Yeah, David, I could take a snapshot. I could take a picture of it. I could do that. Yeah, in fact, I might do that at some point. The house, right? If you ever been, most of you, of course, have been to a casino at some point in your life. I'm not saying you're all gamblers, but you've poked your head in there. Maybe you had a meal at the restaurant. You know that the house stacks everything in their favors. They have the vig, which is their cut, and then they have the odds are in their favor. So over the long span of you gambling, thousands of gamblers coming all over the world, they're going to make their money because the deck is stacked in their favor. So how can we stack the deck in our favor when we're doing trading? Because that's what we want to do. We want to have the vig. We want to have the edge. We want to make money with very low risk. So the way you do that is we use this leader follower program in connection with the gold correlation to take extremely high probability trades. Okay? That's how we do it. Is there any questions on that? I see some questions here. Brian, what size screens? So here's what happened. They're all 27s, but I recently changed my main one right here is now a 32, and I'm giving some thought to bumping them all to 32. So I'm in the process of looking into doing that. I was able to sort of squeak the 32 in here without shuffling this deck around too much, and I really like what I have now. It's really just monster killer good setup. Yeah, so what we're going to do is we're going to watch what NASDAQ's doing. And since we have the lead of, like I said, anyway, 30 seconds to a minute or two, we'll be able to plan our trades over here and plan our trades knowing that gold will go the other direction. All right, I don't see any other questions on the configuration. Now I'm going to move forward, and we're going to look at some trade setups at the open this morning, okay? All right, here we go. Let me get the NASDAQ chart back up here to see, is this today? Yeah, it's today, okay. Here we go. Now here's how I'm going to start explaining this. Let's take a look at, you know what, here's what I'm going to do. Here's how I'm going to do this. Here's how I'm going to do this. Here's what I want to do. By the way, if you don't want to necessarily take a trade on NASDAQ, but you want to be able to track it from a currency trading point of view, in other words, what it's doing, I'll show you how to do that in just a second, okay? Let me show you how to do that. Here we go. All right, you got your NASDAQ chart here, and I've put a line, a vertical line at 6:30 this morning when the equity markets opened. Now, I could go back here and you would see that NASDAQ was going up, it was going down. It was basically in a big old range between 82 support and 02, resistance. You can go back and see it was just swinging around in a big old range all morning long. Now, what you have to do with NASDAQ, I want to show you this here, to give you an appreciation of how fast this is moving and what's going on, is that 6:30 is right here, the beginning of 6:30, not 0, and the end of 6:30 is way over here. So what does that mean? That means that all these bars, all the way over to here, printed in 1 minute. Now let me ask you a question when you look at that. Is that tradable? Could you have taken a long somewhere in here, and could you have shorted somewhere in here? In all less than a minute, all these bars shotgunning at the open. Is it possible to trade this? No, of course not. That's probably 100 bars in less than a minute. There's no way to trade it. There's just absolutely no way to trade it. Now, what could you do? Well, you could say to yourself, oh, the dashed lines are, I have the open high-low indicator here, current day, which Gary does not have in the room. But I put it on. You can use it. You don't have to use it. This dashed line, the black line, is the open from the prior day. And if you scroll up, the high of the day is right here, and the low of the day is right here. Now, just a little pre-market ritual, just to give you a heads up what I do. Whenever I get up early, and I'm usually up at least a half an hour, they open around sometime between 5:30 and 6, and I'm preparing for the market. So I fire up the computer. I get all my charts kind of organized. I look at Bloomberg. I have a Bloomberg feed on the television. I take a piece of paper, and at the top, what I do is I write down how much the Dow futures, S&P futures, and NASDAQ futures are up or down at the top of a piece of paper. I'll just quickly explain this if you're interested. This is kind of my pre-market ritual. So I take a piece of paper, just plain old copy paper. Okay, and I'm going to just quickly explain how I do this, okay? So up here at the top, I'll just write it down. I'll put the date on it, and then I'll put Dow futures, whatever that is. S&P futures. I'll make note of what that is. And I'll do NASDAQ futures, and I'll write them on a piece of paper right here like this. And then normally I'll have some extra time. And what I'll do underneath it here is, here's what I'll do. I'll mark, see these lines right here? See the lines that say low, the white line, black, the open, blue dash, the high. So I'll take the S&P first, and I will make note of the high of the day. S&P futures open, which is the black line, dashed, and the S&P futures low of the day. Put those all right on there, and then I make note of where I am in the pre-market in relation to this. So for instance, let's say the price, I'm just going to put some hypothetical numbers in here, is trading up in here somewhere. 3302.25. I'm just making up a number. I'll put it. Now, what that does for me and why I do that is because it gives me, you don't have to do this. Look, you can do whatever you want in the morning, whatever your ritual is to prepare. And if it's making you money, just keep doing it. What this gives to me is where the low of the day has been pegged at. In this case, NASDAQ, that would be way down here, right? And now I look at where the open. Let's do this for NASDAQ. So NASDAQ would be here, and the high of the day would be way up here at 11. And then I'll put where it's trading at right now. Where is it trading at right now? Well, in the case of NASDAQ was trading right here. So it's somewhere between the open and the high of the day. Now, what that gives me a sense of is, and I look at the size of the numbers too. Now, if Dow futures are up triple digits, if you're over 100, you're probably looking at a very high volatility day with a lot of moving around and a lot of swings. And it's quite possible that you could challenge the low of the day and the high of the day in the same day. Triple digits and double digits on that SPF. So here's an example. Maybe I'll get up and I'll see S&P futures, Dow futures are up 112, S&P futures are up 12, and NASDAQ futures are up 38. And all the high in the day, open, high, low, looks similar to this. So all I'm trying to do is get a frame of reference of where these swings are, because it's quite possible we might hit them at some point in the morning, right? Okay, everybody, you understand what I'm doing there? You don't have to do that. You can do it. If it helps you, cool. If it distracts you, then don't do it. It's totally up to you. I'm just sharing what I do. All right, so let's move on. So here we go. We got our shotgun. Now, if you want to track what happens here, but you don't want to trade it, you can simply use your chart trader or object trader, go into Sim, or you can create a separate account. I've shown how to do this on other webinars, and the way it works is you go into your, I can't show it because it has my account number on it. You just create an NQ account, NQ Sim account, okay? And you go into Sim, and you right click, and you put a sell limit order right there like that. Just like that in Sim. So what happens is it's dinking around, it's dinking around, it's dinking around for about a minute. And then right as you're turning 631, what happens right here? What happens right there? Well, right, it's visible on the charts, Brian. For me, I'm a tactile person. I need to see and I need to write things down. It's just a pre-market ritual that I've been doing for a long time. I've not really talked too much about it, but that's what I like to do. It just gives me a frame of reference. So as I'm watching the markets move around, we can have a big day, we can have a small day. Is it going to be a range-bound, choppy day? So that's why I do it. All right, so we can see right here, just as we turn 6:31 a.m., we're filled short on NASDAQ right there. Of course, you can make that a live trade with Object Trader. You could put a Sim sell order, but by hook or by crook, you're short. Now, let me ask you a question. With NASDAQ breaking down like that, and given our knowledge of the correlations between the markets, what should gold be doing at that exact same time? When this market broke, NASDAQ broke, because I mentioned earlier, it's the leader. It's the leader on the equities. What should gold be doing at this exact moment? Any ideas? I'm getting a gold chart up for you so you can see it. What should gold be doing if NASDAQ breaks support and starts tanking like a big dog? What direction should gold be going at that same exact time? If the correlations are intact. Right. So let's take a look at gold. Here's gold right here. Let me blow it up. So you can clearly see that gold was sideways to up in the pre-market session right here. When I say that, I mean that it was range bound, but you had a green background and you were coming off of an uptrend move from over here. See, there was an uptrend move, so the background was green. And so this is part of what I was going to teach, is that when you're range bound trading, you are buying support. So the actual long entries were down here. But let's suppose that you didn't. Let's suppose that you didn't trade the pre-market. What's another thing you could do to get into gold? What do we do over here on NASDAQ in our SIM account? We had a sell order sitting at support, so when it broke, we're filled SIM short NASDAQ. Right? Well, I mean, couldn't you do the same thing over here in the top of that range? Right there? Right there? Could you not have put a, let me make sure I'm in SIM, stand by. It should be in SIM. Yeah, right. You go into SIM, and you can use Object Trader or Chart Trader or however you want to do it. You can put a box around it. You can put a market limit buy order right here. And sure enough, what happens to gold? And let me blow this up so you get a really good sense of when that happened. Right here at 6:30, almost 6:32, on that bar right there, you were filled long on gold. So who led the move? NQ or gold? Who broke first? I'm looking at 6:31 and change in 20 seconds when that pup broke. And that one broke at 6:31.55, almost 6:32. So between the two, who led the break? NQ or gold? Which one broke first? NQ on the short. Right. By almost a minute, 30 to 35 seconds. 30 to 35 seconds, NASDAQ broke. So in SIM, the way it would have looked is, unless you wanted to take live trades, you can obviously take live trades. But what I'm saying is these are setups for trades on other charts. Like if you want to trade YM and ES, you're looking for the leaders, and we have found the leaders. The leader is NASDAQ, and a quick soon to follow is gold. Now I'm going to pause the screen. Given your knowledge of this, I'm going to show you an ES, and I'm going to show you a YM chart. Now, before I even show this, I want everybody in here, I want you to make sure you're awake. What direction do we think that YM and ES are going to go, given what NASDAQ is doing and given what gold is doing? What direction should YM and ES go, up or down? They're equities, so which one? Are they going to follow gold or are they going to follow NASDAQ? What do you think? Are you going to be preparing to take long trades on ES and YM, or are you going to be prepared to take short trades on ES and YM? What do you think? What's your prediction on what direction they're going to go? What do you think? What say you, team? What say you, team? Down. Our leaders have already broken. Within seconds or less than a minute or two after the market opens, Our leaders have broken. NASDAQ is tanking like a dog, and gold is running up like a big dog. So we are looking to short those two, right? So let's look at the YM and ES charts and see how the correlations worked. Now in the pre-market here, what I'm showing you is that 623, 616, so you're fully 7 to 10 minutes ahead of the open. What is YM doing on this white line here? What is this? What is, every time this white line goes down, what does that mean? What does that mean? Fresh lows of the day, right? New fresh lows. When the white line is broken, that's new fresh lows of the day. Now we can see here, on the other hand, that ES is a little bit different in the fact that we were in a range that looks something like this, right? And here's the pre-market here. So let's advance it a little bit more. What happens here at 611? Well, let's go over here at 611 on YM. Look at that. I'll be darned. 611, 612. YM is already breaking to fresh lows. And what is ES doing over here? Now, when I came into the room, if you recall, Gary had a box and a line sitting up here. Does anybody remember where it was? Do you remember? Anybody remember that? Does anybody remember what was said? I'm gonna reconstruct it for you so you can remember what was going on at that time. Okay, you ready? I'm gonna show it to you right now. You have to pick your spots on where you're going to get in. You really do. You got to pick your spots on what you're going to do. As we were coming to the open of the market, I said on ES, and Gary said he had a line and a box right here. I said if it gets anywhere around 15 or 16 up near that mid band and it rolls over, I am going to short that. Right? Remember that? Remember there was a box up here? There was a box sitting right here at 15. You remember that? Anybody? So you have two choices. When you're looking to get in these markets, rarely at the open do I like to sell the break of support. There's got to be some kind of consolidation or pullback. In the case of YM, you got that right here. Here's your consolidation right here. You could have boxed it. You could put a sell order underneath of it. There's all manner of ways to get in it, but it's just hovering off the lows. So you're looking for what direction? You already said short. So we're looking to short this break on YM, right? Now watch what happens going into the open on ES on the chart on the right. Watch. Comes right up. Where is this bar right here at the open on 6:30 on ES? And the wick of this candle here that goes up just shy of the mid-band. Remember that? Remember that? Remember we said we're going to short? I shorted this bar right here. That's where I got in, right there. I think my fill was like 1450 or something like that. So why would we be shorting this with some confidence? Let's move on. What goes on to happen here? Here ES is dinking around, dinking around, dinking around. There's 631. And what happens to ES right here at 632? 631 on ES is right here. 631 is like right here. Now, if you missed this entry up here, could you have boxed this and taken the short? Could you have hit a market order in here if you didn't get that exact swing? Yes. Could you have put a limit order sell here, a limit order sell here, and a limit order sell? Could you have boxed it right here, short only? Yes. Here's 6:30 and 40 seconds. Here's 6:30 and 32 seconds. Here's 6:31. Where was NASDAQ and gold at 6:31? Let's go back and look. You remember? Let me get these charts so I can toggle between them real quick. Stand by. Give me 1 second. I'm going to position them so I can toggle back and forth. Because here's the thing. If I put all 4 charts on the same screen, it's going to be so small you're going to hardly be able to see what I'm talking about. So I want to just really sort of toggle back and forth here, okay? Here we go. This is going to help you a lot. I'm going to get this position just like you want to see it. Here we go. Stand by. Let's play out how the rest of this went, and then I want to show you something else pretty cool that you can trade. What happens to NASDAQ? It just completely falls off the map. Tanking, tanking, tanking. Tanking, tanking, tanking. Almost gets to the low of the day right here at 632. So 632 on NASDAQ. You had already been short NASDAQ way up here at 90. Remember that number 90? I said if it breaks 90, it's going to break. Sure enough, right under 90, there it broke and you were filled short. So by 72, you were already done 18 times 4, 60 ticks. Here's 632 on 632 and change on NASDAQ. Here's 632 on gold. Right here. Way up here. Gold's up here. Gold's up here. NASDAQ's way down here. So let's go back to the ES and YM chart. Here's 631 on ES. Can you short this with some high degree level of confidence, knowing that these other markets are way down here now? What do you think? How about YME? Let's see what YME does. Breaks down like a big dog. Every tick is a fresh low. Because market order, limit order, box, kiss and roll, however you got in, you're short from here. Isn't that money? That's just money. It's just handing you money. It's just handing you money. I don't know how to get more clear about it than that. I mean, you know, and that's why I've showed you that configuration, because I am scanning between these two. I'm scanning between ES, YM. I've got NASDAQ and Russell over here tucked to my left. I'm looking, scanning. I'm watching who's the leader. I got my gold chart up here, and I'm watching that thing rip up like nobody's business. Put a buy order right here or a box right here and get long. That's money. No-brainer money. I mean, I don't know what words to say. Anyway, let's proceed. Any questions? Any questions? You can put a tight stop on Nostraphone. For instance, on this YME, if you went ahead and shorted this break and you got filled, say, down here, short, anywhere on a break of this bar, if you had a limit order or a box, you put your initial stop above here, so it's a very tight stop in case it bounces on in your face. Well, Brian, I know, you know, a lot of people were very skeptical. They're like, oh, yeah, today was no-brainer. What about tomorrow? What about yesterday? What about the day before? Blah, blah, blah. Well, you know, I'll tell you what. There are days, I'll give you, on occasion, there was a day, I think, last week, one day last week out of 2 weeks, where that correlation didn't work, where gold was going up and the equities were going up. But the beauty of it was we saw it clearly and we traded it accordingly. You don't fight the market. Look, if gold's going up and the equities are going on, I'm not saying to short gold. You trade in the direction that you see, right? It does happen. There is days it's happening. You know, there might be some news on gold or some world news where the algos are buying that day and they're not selling and they're not inverse. Well, then you still trade it in the direction it trades. Many times I'll put the gold trade on too, Bill. So what'll happen is I'll put my YM trade on. I'll position myself and get ready to trade the ES, and then also put the gold trade on. I'll put the gold trade on. Rarely, I might put a sim trade on NASDAQ. I rarely put live money against it simply because it's just so volatile. And the only reason I put, you don't have to even put a sim trade on it. You can just visually look at it, and I will be calling it in the room as I see it breaking up and down. I'll be telling you, look, NASDAQ, the leader, is breaking. The other ones are going to break any minute. Get ready to sell it. And we'll try as best we can, of course, to call out the areas where you want to get short. But what I'm trying to impress upon you, if you want to be an ES trader and it's a laggard here, right? It's 30 seconds to a minute or two behind all the other markets that are moving. So could you put a short on here with a high degree of confidence? Yes. At 631, could you even put a short here with a market limit order or box with a high degree of confidence? Yes. The market correlations are working. Load the boat. Where you're going to make a lot of money in futures is by leverage, okay? Look, you can put 1 or 2 contracts on and do quite well. Let's finish this out. Let me show you what happens on ES. Dropping. Each tick is a fresh low, and it comes down here to 630. And so let's say you got filled, these are round numbers, 1450, and you got out down here at, I don't know, 250. That's 12 handles. 12 handles on ES from here to here. How much is that per contract? How much did you make on this one ES trade if you just put a one lot short from here? A one lot short from here to here is how much? Just a one contract trade on ES short made you how much money between your high confidence level short here and you get stopped out down here? How much is it worth per point? 12 points times what is how much per contract? 6 bones. 6 bones, right? 6 bones. $600 a contract. So you put a 2 lot on here. How much are you up? You were in this trade from 630 and change, 631, and you got stopped out at 638, 639. You were in this trade for 7 minutes. And a 2 lot short made you $1,200. How many of you would be done? You didn't trade anything else. You didn't take YM. You didn't take NASDAQ. You didn't put a sim thing on anything. You'd missed gold. You didn't take that. You took a very high degree confidence level short on ES and you put a 2 lot and you were in it for less than 8 minutes and you made 12 bones. You would be done. This is what you want to do in trading. In futures markets trading, this is your goal of the day. It doesn't have to be $1,200. It could be $500. It could be $1,800. You can do the math. If you had 4, it'd be 24 bones. And most of you that have been around for a while, and I see quite a few faces that have been with us a long time in here tonight, our goal is to get one and done. You knew ahead of time this was going to break. This was a no-brainer. Throw contracts at it. When you see the markets correlated and they're trending, that's the time to leverage up. When it's a crappy, range-bound, sloppy day, and it's all the markets are sloshing around in the pre-market, Dow was up, 10 points. S&P was up 1. NASDAQ futures were down 3. And you see a sloppy old range. Is that a day for you to leverage up and put lots of contracts on? No. A day like this, big trending day, when the pre-market is up and down triple digits on the Dow. Excuse me. Sorry about that. That's a no-brainer. Load the boat. Yeah, what I'm saying, just to be clear. So I'm going to try to clear up please ask any questions you want, because when we get done tonight, I just hope there's no confusion on how to play this, because I'm going to do this exactly the same tomorrow morning and every morning next week and going forward. What I'm showing you here is exactly how I trade it. Exactly how I trade it. So in order, let me do a summary. Let me just do a quick summary, and then I want to show you the reversal. And then I'm probably going to run out of time. So I'm going to try to get through this as quickly as I can. In order, as I said, this is nothing in the world is 100%, but I can say the likelihood is probably 80, 85, 95%. It's not 100. In order, normally, I'm just going to say this with a caveat, on most mornings, the correlations are as follows. Just to clarify any potential communication on how we're looking at this and trading it. Okay. First, now I'm saying normally on most mornings. There's exceptions to this, and I'll explain that. NQ is the leader in terms of breaking one direction or another. second. Now this is not necessarily in the order, but normally this will occur within 30 seconds to a minute and a half, following whichever direction NASDAQ is going, breaking up or down. Gold, YM, and sometimes the Russell. Now I'm going to put parentheses around the Russell because if you traded the Russell RTY, I'm going to put will follow close by. Soon thereafter. And almost every morning, the laggard of the morning is ES. ES will normally be the last to the party. Yeah, follow last. So just to be clear, Trifone and David and you guys, everybody who's asking questions, this is how we trade it. This is what we're looking for. If everything is right with the world, it will go more or less in that order, just like that. NASDAQ, just like I showed. NASDAQ will break first, up or down. Next will come gold, YM, and or Russell. The reason we put the caveat on the Russell is there are some days if you trade the Russell or you watch the Russell chart, and that's why I'm not showing the Russell on the webinar tonight, is because sometimes the Russell, remember how I told you the Russell's tucked in the far corner of my second screen? That's because I'll glance at it. There is an occasion where the Russell will do something funky and different than what the other three are doing, and it will actually turn out to be the leader. It's rare, but it happens. You know, the Russell, you've seen some days with the Russell, right? It'll be tanking like a dog, and the other markets are running up to the moon and breaking their highs of the day, and we don't understand it. And then sometimes what will happen is they'll peak out, flip, and then start to sell off and follow the Russell. That will occasionally happen. But normally it goes like this: NQ, gold, YM, sometimes the Russell, and ES will be the last. So if you want to take good, comfortable, I don't want to say relaxed, but high probability ES trades, we will look for these correlations. Top step evaluation. Well, I mean, you have to follow their rules, David. You know, depending on the size of the contract on or your evaluation account, whether it's 25, 50K or higher, you have the rules that you have to follow with them, right? You can't, you know, there's drawdown requirements there. There's a profit goal. You can't trade during news. You know, that's where that all comes into play. What I'm explaining to you now in terms of the correlation really doesn't affect the one up or top step. That's a whole separate qualification issue. Mario says, thanks for all of this. I've been following the correlations you look at, and it's helped me to stop chasing and over trading. Good. Excellent, Mario. That's why I show this. See, you don't misunderstand. So when I show, and I tell you that NASDAQ is first, the caveat I put on that too was you don't have to trade it. You can just watch it. Stick in the corner of one of your screens and just watch what it's doing. You don't even have to put a sim order on it. You don't even have to do this. If you want to put a sim order, what's nice is that you go in your P&L, and as that pup's tanking and tanking and tanking, and gold's running up, 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 and you're getting ready to take an ES trade and load the boat real good in here, right? 2, 4, 6, 8, 10 contracts. You're getting ready to load the boat and make some good money without any heat. This is what you're looking to do right here. Right here. This is it. This is all the reason I've shown everything else. The whole reason I've shown all of this was to set this trade up right here. See it? That's the whole purpose of this. Now look, you might like trading YM. You might like trading NASDAQ. You might use NASDAQ and really get good at trading YM as a follower. By all means, do it. Maybe you don't like ES for some reason. I don't know why, but maybe you don't. Maybe some of you like gold. Gary has good calls on gold. You could take the gold trade too. You don't have to leverage up on any of them. You can put one lot here. You can put one lot here. You can put one lot here. Trifone, would it be reasonable to place a market order on ES if I see both? Yes. 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 Let's go back. Here's Trifone's question. He says, do I have to put a box or a limit order if I see the other markets ripping? And in this example here, ES is getting ready to roll. Can I just hit market order up here? Yes. And you would put a tight stop just above where that box was. See the swing at 15 and a quarter, 15 and 3/4 right in here? So let's suppose you hit a market order and you're filled actually maybe on close with one of these bars right here like this. Somewhere, I don't know, let's say right here. It's an extremely low risk trade. All the correlations are intact. The leaders are leading and gold is going up, and you hit a market order to sell here and you put your buy to cover stop right up here. So look at your risk. Your risk is almost nothing. You hit a market order and you're filled. Here, I'm going to put it like it's a limit order. You put a limit sell, or you put a box or whatever, and you get filled on a market order, short at, I don't know, 14 and a quarter. Look how much risk you have. It's like what, 5 ticks? Even on a one lot, what is that, 75 bucks? I saw that, Neil. Thank you very much. That was a beautiful, some very nice words you had on a testimonial for us. I really appreciate that. I didn't realize you were logging and tracking all those trades. I really appreciate that. That was very nice. Thank you. Maybe Gary will share that with the team tomorrow in the live room. We'll see. Neil had a very good review of our trading in the live room, so he's been tracking it, and I didn't even know. It was very honest. Yeah. Yeah, 5 ticks is 62.50. That's right, phone. See how much risk? See, you're not taking very much risk, and you never felt any heat. It just fell right off the map in your favor. And each tick here was breaking the lows of the day. And we already knew that was going to happen because these other markets were just ripping on down, right? All right. Now, before we wrap, I want to show one other thing. I want to show one other thing real quick. Now, what do you think? When these markets hit their fresh lows, is it possible that a reversal could occur at or around 7 a.m. Pacific? We call that potential key reversal time. I want to show that before we wrap. Okay, you ready? Stand by. I'm going to show you some charts. Let me get the gold chart out of the way. That's going to confuse everybody. But I'll pull it back down in a second. Okay, hold on, let me get these orders off of here. Stand by. Give me 1 second, please. Get this off of here. Shuffle this over here. Make sure there's no orders on NASDAQ. Oh, there's still an order on NASDAQ. Stand by. I want to show you one really good thing that really was good today on a follow-through trade. If you missed the shorts at the open, I'm going to do like a real-time recreation on the charts with you. This you're going to love a lot. Watch this. All right, stand by. I'm trying to position it correctly. Let me see if I can get this right. Let me get this right. Okay, hold on. All right, I'm going to start all these charts together at 6:35. Ready? Here we go. And I'm going to advance them. And you're going to try to tell me who the leader is. Okay? It's a little exercise you can do in the morning. Trifone, just a minor detail at this point. Would you prefer exit on close beyond make the swing for your stop, or just a hard stop at the swing? You mean stopping out on the trade? Well, it's kind of a function of what I don't mean to be evasive here, but as you can see with the descent of the sell-off on the sell programs, that the depth and of the retracements are very different. Let me explain. Here at 634, 635, you get some consolidation, and then NASDAQ does what's called a deep retracement up to line 6 right here, and then rips down through 635 and 636 down here. So that's what this final leg down looked like that. That same retracement on YM looked like this at that time also had a deep retracement all the way up to 20. So what I'm saying is if you're using stealth in line 6 or line 2 in the case of the shorts to get out, you would have been stopped out here. And then you could have re-entered here, and I actually said you could box it and you could actually short it again right here. And what did that retracement look like on ES? This retracement here and this retracement here on YM, what did that retracement look like on ES? Where is it? Anybody? It's right here. See this little tiny bump? See this little tiny baby bump where it goes up and kisses line 2 and rolls over and puts in fresh lows? So this is what I'm trying to emphasize to you, is that each of these markets have very different price action volatility levels that they go through in terms of the depth and breadth of the retracements. Does everybody see? You can see that. That's very pronounced here. Can you see how deep the NASDAQ and YM retracements go versus ES? All right, let's see, what was gold doing at that time? What direction should gold be going if in the downtrend you're getting retracements on ES, you're getting retracements on YM, and retracements on NASDAQ? What should be happening on gold? What do you think? Now, gold was going up. Equity's going down. Now, the equity's retracing. What should gold be doing? Pulling back. Good, good, good. Let me show you. Look at this, 633, 634. What's gold doing in here? You think these algos aren't correlated? You bet they are. Whoa, Captain. This retracement on gold corresponds to these retracements up on the equities. You see that? All right. Now I'm going to advance this all together if I can. And when you think there's a trend change up on one of these instruments that's going to be a leader up, you type in either NQ, YM, or ES. Are you ready? Looking for trend changes from a leader, from down to up. Let's start with NASDAQ. 636. 636. Hold on, stand by. I haven't done them all yet. There's 636 on YME. Now, if you recall in the room, I was making note of the fact that there was a difference between NASDAQ and YM. What was that mean? Well, from what I can see here, the bottom on NASDAQ was put in here at 635 and change, yes? You get this massive retracement, and then you got a series of higher lows right here. Did NASDAQ go in here and break its lows? No. What was going on with YM at the time? If you said fresh lows, you were right. It was continuing to descend. What was going on with ES? Was ES retracing precipitously at 636, 637? What direction was old ES going? In here. Fresh lows. So we're getting a little bifurcation in the market. That happens. Don't let that freak you out. Let's go ahead and continue on. 637, 638. Now let me explain how I look at this. Can you see this right here? Can you see these two swings right here? Can you see them? You see those two swings right there? Now you don't have this chart in the room, so you're going to have to do this yourself. Okay? I'm showing you the swings. This is how I look at it. This is exactly what I do with this chart. I'm going to show you exactly what I do with NASDAQ. I look for an identified swing after a big move down, and I look at where the major swing is located in relation to that down sell-off, and it's clearly here at 64.65. Now in the room, you might hear numbers out of me, and you might be wondering where the heck are they coming from? That's where they are. If I say something in the room like, as long as NASDAQ stays under 64.65, we're still trading the short side of it. This is where that comes from. If you're ever wondering, what the heck, where is he getting that number? There it is, right there. That's where that comes from. See that swing? See it? See the two swings right there? So I'll tell you, as long as it stays under there, we're trading the short side of NASDAQ. Now let's watch what happens with YM. Here you are at 638. I'll show you what happens. 638, you get a break up through it. You pull back right in here, and what do you get on NASDAQ? Right here. Let me help you out. What color is the background now? What level has just been broken? Right here. What level broke, and what color is the background? And what type of trade is that? Right here. That's right at 639 and change, right here, 640. It flipped. It's a long trade. What does this portend for the other markets? What does this portend for the other markets? What does that mean? Here it is. I'll go all the way through 641. There it is right there. What is that? That's a long trade right there. There it is. What should happen to these other markets over here to the right? What should YME be doing about this time right here? Or maybe within 30 seconds to a minute of it. What should YM do? Over here, right here. Here's the bottom, 637. It should break up. Well, let's watch. There's 639, 640, 647. So after this thrust, now where was that swing that I was talking about on YM? What was right here? See it? So you might have heard something in the room like as long as YM stays below 55, we're trading the short side. So it just follows within a minute or two of NASDAQ, we get a thrust, breaks that swing, goes all the way to 76. And so right here at 643, what trade did you get on YM? A long trade, right? See it? So let's look at the precise times. The bounce off the mid-band at 639 was the NASDAQ long trade entry. Yes? See it? Let's see when that bounce off the mid-band occurred on YM. Right here. And what's the time? What's the time on this? 643. How many minutes later off of NASDAQ was it? 4 whole minutes later. See it? At 643, where was NASDAQ? Way up here, 641, 42. It had already run from 62 to 75. It had run like 20 ticks, or 80 ticks, 60 ticks. It's already up 60 ticks. Could you take that long trade with some confidence? Now, at that exact same time, what should be happening with gold? And then I'm going to reveal ES. All right, I'm going to hold off on gold. Okay, now I'm going to show you something pretty cool on ES. Watch this. Okay, there's 639. Hits its head, rolls over. You could have reshorted. We called a reshort at 0750. There was a line right here. You remember? ES was still heading down. We had a line right there. Remember 0750? Anybody say? If it breaks 0750, we're going to reverse and get long. Does anybody remember that number? 0750, if we break it, we're going to reverse the short and get long. Now watch what happens. This is beautiful. Right here, watch. Watch this. There's 0750. That's where that swing came from. So that swing, this swing corresponds to this swing. Here, let me do it this way. On YME, right here, and this swing over here on NASDAQ, right here. See the swing? See it? We come down. We notice in the room that we're starting to get a series of slightly higher lows here and here. We're at 641, 643, 647. You kiss it one more time. Now at 647, would you be willing to put a buy order in right here? What do you think? Did you take that, Mario? Yeah, we said if it breaks 07. Now, why would we say if it breaks 0750 to get long? Why would we say that? Well, let's look at what's going on over here. YM at 647 was all the way up here. It had already broken up like 53. This is like 40 ticks. 40 ticks, 35 ticks at 647. You're all the way up here. NASDAQ's way up there. Up here, way up here. Here's ES dinking around. What are we expecting to happen? Another kiss and roll. Kiss and roll. It's trading in the lower range. Here comes 652, 653, 654. Ba-bang. There you go. That trade is money. If you want to look for a sure thing trade, that's it right there. That on ES and the short were money. Watch where it goes. It goes all the way back up, almost to where it broke down, all the way up here. Remember I was calling out 14, 15. Remember I said 16. We want 16. Look, it came all the way up here. This is beautiful. Okay, so it went from 0750. Let's say you got stopped out at 1450. How much was this trade worth? 7 points times one contract is how much? 350. Two lot on that is how much? 7 bones. Right. ES long, 2 lot plus 7 points was 7 bones. So how was the trading ES this morning? You had 2 trades. How much are you up? 2 trades. One short on a 2 lot made you around 12 bones, less commission. If you didn't want it to one and done and you bought the 0750 break and you got, you know, seven handles off of it, 7 points, 2 lot, you're up almost $2,000. I'd say that's a pretty good morning on 2 trades. What do you think? I'll take that all day long. 2 trades, $2,000. Yeah, I'll take it. Less commission. All right. Are there any questions? I really ran over. I'm almost 15 minutes over tonight. I didn't mean to go over. I get just so enthusiastic about these trade setups and the correlations. They're just the best, aren't they? Man, I'm telling you, if you just could go out and spend a little bit of money on a nice graphics card and a couple of big screens, and you try to get a setup something. You don't have to be exactly like what I have, or try to get something similar. Whatever your correlations, whatever your instruments are, and you learn how to see and take these trades, and we help you in the room by telling you what we think they are, and we're observing and trading them with you, and we're looking at swings up and down, and we're taking profits and calling stops. I mean, you know, I don't think it gets any better than that. I'm going to stop the recorder. Thank you for sticking around, everybody. I really ran over. My apologies. I hope this all is something